Hello, Matt here from Collective Shift. Thank you for tuning in to this week's macro and crypto update, where I share the most important news from the past week with you in the macro and crypto spaces. As per normal, we'll start with the Australian economy. I'll then go on to global macro and then the cryptocurrency industry after that. I'll wrap things up with some forward-looking comments on the state of the cryptocurrency market and where I'm paying attention to in the short term. Starting with the Australian economy here and the Reserve Bank of Australia, which is Australia's central bank, the governor of the Reserve Bank of Australia, sorry, Philip Lowe, he came out and said that he expects the Australian economy to recover quickly from a significant hit that it's been dealt with the recent lockdowns in Australia's most populous cities or states rather. More importantly, what I want you to take away from this was that he played down expectations of higher interest rates before 2024. So, those of you unaware, Australia's interest rate is 0.1% at the moment, and previously the RBA has said that they expect 2024 to be the year or period where they start to lift interest rates once again. In the past days and weeks, there was some murmurs and pricing in of the market that, hey, this interest rate might actually be lifted in 2023, possibly even late 2022. So for Philip Lowe to come out today and basically quash that speculation was significant and will be very promising news for property owners and share investors, because it essentially means that capital or access, the cost of money, so to speak, will be at near historic lows or at historical lows for quite some time yet. So yeah, that was a significant news today. Philip Lowe he's still pointing, rightly so in my opinion, pointing to stagnant wage growth, which is, yeah, it's really just chugging along at a very um, disappointing level at the moment. It has done for many years, Australia's wage growth, that is. And he also pointed to that inflation isn't as much of a concern here in Australia as it is in perhaps other areas of the world. Like, as I've covered in recent weeks, like this, we've seen South American central banks lifting interest rates in the past month or so because of concerns with inflation. Europe has started to see inflation rising and have also seen that in the US. So obviously inflation has started to lift in Australia, but proportionally it's just not as big of a concern. And the wage growth, as Philip Lowe has stated today and has done previously, that is a big area of concern still for Australia. Just another data point that came in earlier this week. Business confidence has slightly improved in Australia, in the Australian economy, but does still remain deeply negative due to the heavy toll of the pandemic. I believe the conditions of business confidence in New South Wales was slightly better, but in Victoria, which is Australia's second most populous state, the confidence levels deteriorated, mainly just due to the continuation of the lockdowns. But yeah, so speaking of lockdowns, I think New South Wales and Victoria um, are both basically have scrapped the idea of a zero COVID, or getting back to a situation where there's zero COVID cases. They're um, going to give it a shot at living with the virus, so for lack of a better term, as we've seen in many other countries attempt to do, like so many other countries in the world. So I think there was news from Victoria today that their Premier Daniel Andrews will be announcing, I suppose, a roadmap out of um, out of the lockdown for Victoria. I think on Sunday, that is local time. Over in Europe, and a policymaker from their central bank, the European Central Bank, has said that inflation in the euro area will, quote unquote, in all likelihood ease as soon as next year, but that they are ready to act if it doesn't. So we've had this temporary spike in inflation basically globally, and many, such as especially the US central bank, has kept implying or sharing their belief that it is just transitory. I'm sure you've seen that adjective used a lot, transitory inflation, essentially meaning that the inflation, it's just going to be a very short-term impact because of factors that have only been brought about by the pandemic, such as higher input costs and higher costs to produce stuff because it's harder to get, it's more expensive rather to get things shipped to you, and there's a lot of shortages in key kind of input goods. So if it's not transitory, however, the ECB is saying that, hey, if it isn't transitory, we are prepared to act, and we're not just going to keep hiding behind using the excuse that it'll come back down. So that was noteworthy there. Speaking of that higher cost to produce goods in the US, production or producer prices moved higher than expected in August. It's important because producer prices reflect what businesses pay for the materials that go into the goods they eventually sell to consumers. These businesses will try to absorb some of those cost increases, but typically, and if it goes for long enough, that those cost increases will be passed on to consumers, and that will contribute to inflation, as I've covered in past videos. That's called cost push inflation in economics, and it's basically a supply side factor that can contribute towards inflation that often doesn't really get much acknowledgement in the public. It's almost always inflation is talked about in the sense of demand and like higher wages contributing towards inflation, which is true, but you can also see it on the supply side, which in this case, especially in this COVID era, has been higher production prices and costs due to mainly just the expense of shipping, like skyrocketing and freight, and also just shortages of inputs and supplies, which smaller supply means just economics 101, smaller supply leads to a higher price. So yeah, that was noteworthy there, particularly because this producer price increase was higher than expected. So as I've said earlier, the markets tend to care more about the difference in expectations versus actual data. That's what drives markets more than necessarily the actual data that gets released. Speaking of important macroeconomic data in the US tomorrow, or well, on Tuesday in the US time, they will be releasing their consumer price index, so their most recent inflation data, which in this day and age is, in my opinion, the most significant macroeconomic data that an economy can release. And we've seen in the past weeks, in particular, like so much more discussion of inflation in the headlines and podcasts and mainstream media, business shows, because yeah, there has been early signs that prices are increasing and they've stayed increased for a while now, and some doubt creeping in of, hey, are these even going to be transitory? Um, just minor short-term bumps up in prices, or are these prices actually going to stay once the pandemic gets under control? So this data release is obviously significant for those reasons, but it's even more significant because the Fed is meeting next week. So if inflation, as it says here, if inflation is hotter than expected, which the expected figure is 5.4% annual, if that is higher than expected, then I would definitely anticipate the Fed to come out with a bit more stronger language surrounding their thoughts and opinion on the state of inflation in the US, and yeah, not so much being distant and thinking that it'll be transitory and go away. I would expect the Fed to come out a bit stronger with their language and be a bit more assertive with where they see the inflation going. So very, very important to be keeping an eye on, and that's what I consider the most important macro news to be keeping an eye on over the next few days and leading up to next week's meeting. Moving on to crypto here as I take a drink. Interactive Brokers, one of the biggest brokerage firms in the world, today announced that they are adding support for cryptocurrency trading, starting with four cryptocurrencies: Bitcoin, Ether, Litecoin, and Bitcoin Cash. I don't know how the latter two always seem to make it into the inaugural listing of these brokerage apps, but there you have it. Nonetheless, still huge news. This will be done in partnership with Paxos. So Paxos is one of the most unheralded companies in the whole crypto industry. A lot of, I guess, regular retail investors and just like onlookers of crypto will never really hear Paxos's name, but the amount of things that they are involved in is quite astounding, given how little press they always receive. Yeah, just more news of adoption here has been the theme of the week, and not just, I guess, the news in and of itself, but the names that are attached to that news, the high profile names, as we'll see in the next few minutes, has been something that I really want you to just get to just understand and take away from this section coming up here. So Interactive Brokers being the first one off the bat here. I just want to quickly comment that the brokers, you're just seeing more and more brokers responding to demand from their users for cryptocurrency trading. So Interactive Brokers had said previously that they were going to launch this, so it wasn't really a surprise today when it happened. But when they did say they were going to, they said the reason was because of demand from users. And that's been the same case for the likes of Revolut, um, well, PayPal really, Square's Cash App, eToro, um, and I think CMC Markets, TD Ameritrade, Charles Schwab. There's just been so many like brokerage apps just adding support for Bitcoin and the major cryptocurrencies. So it's just more mainstream adoption, making crypto just more familiar to the average retail investor and really just, I guess, establishing itself as an asset class. More huge adoption news this week was EY, one of the biggest professional services consultancy firms in the world. They're heavily involved in, or not heavily, but they've been increasingly involved in blockchain solutions and particularly ones built on Ethereum in the last few years. Today they announced that they'll be using Polygon and Polygon's framework to deploy its blockchain solutions on the public Ethereum blockchain ecosystem. So very exciting. Today that happens. Polygon is like almost like a side chain of Ethereum, so it's a lot cheaper to use, and you can do a lot more transactions for cheaper, but you have that trade-off of it not being as decentralized as something like Ethereum. But yeah, just promising to see EY here working with the Polygon team. Another huge news of adoption is MasterCard acquiring CipherTrace, so one of the biggest on-chain or blockchain analytics firms in the world. Just more validation here is the main theme here I want you to take away from this. And secondly, more just, I guess, want you to be aware of how fast the on-chain analytics sector or subsector is growing. There's a lot of contracts. Most developed countries now work with like blockchain analytics companies such as Chainalysis, tax revenue agencies, and regulators like fraud detection, things like that. So that kind of, in my opinion, has to happen if crypto is ever going to continue to grow and become an established asset class. So MasterCard is obviously taking a bet there that they see that's the way things are going. And it isn't MasterCard's first involvement in the crypto space. They have invested in a few different crypto companies, but this is definitely a step up from just an investment, like to buy a whole company, make an acquisition was huge news. Australia's biggest investment bank, Macquarie, they announced this week that they were essentially getting into Bitcoin mining. So that is through a partnership with one of the industry's most oldest companies. That's Blockstream, a Bitcoin mining company in the US. So Macquarie will Macquarie and Blockstream will work on a project that's based in North America, and that project will utilize Blockstream's enterprise-grade mining facilities and expertise in mining hardware hosting. So that will contribute to Bitcoin network, the hash power or compute power that goes into mining Bitcoin. The more of that there is, the more robust and secure the network gets. So essentially, Macquarie here will be, yeah, generating some revenue from Bitcoin and also contributing to the robustness and security of the whole Bitcoin network. I know Macquarie, they had two former employees who were brothers, in fact, and they went on to found a Bitcoin mining company called Iris Energy, and they're headquartered in Sydney, but I think most of their operations, it's in that renewable Bitcoin mining space. So all their operations are in Canada, I think British Columbia in Canada. So to see, yeah, Macquarie, I think Macquarie did invest in them, and then to see Macquarie also partner with Blockstream here on another separate Bitcoin mining initiative, yeah, it's just really, really promising news for the whole industry. Sticking on that theme of adoption, I said it was a big week. Zipco, so Zip is one of Australia's biggest buy now, pay later providers. With Afterpay, those two are the biggest ones in the market. So Zip announced today that it'll allow its US merchants to accept Bitcoin as payments for goods and services. No date was announced for when this is planned to be rolled out, but I think there's a date. In July, they said that it would be happening in the next 12 months. I did just want to comment quickly. Afterpay, so Zip's main competitor, was acquired recently by Square, which yeah, it's co-founded by Jack Dorsey, and Square has one of their products is the Cash App, which has had Bitcoin trading essentially available to its users for about 3 years now. And yeah, I would expect Afterpay, like in the next 12 months as well, to integrate Bitcoin in some capacity, and Zip obviously also going down that path. One of the final adoption users of the week, MicroStrategy buying another 5,050 Bitcoin, so it now holds a staggering 114,000 Bitcoin. And that is, I think, yeah, over $5 billion US worth of Bitcoin. For those of you unaware, MicroStrategy in the middle of last year became the first publicly listed company in the US and I think in the world to purchase Bitcoin and put it on its balance sheet as an investment. And their CEO, Michael Saylor, has really done a lot of work in educating on the value proposition of Bitcoin and educating other C-suite executives in other companies about why you would put it, like why you would spend some of your treasury on Bitcoin and invest in it. And he continues to, I guess, not just talk the talk, but walk the walk in terms of continuing to, buy dips whenever Bitcoin dips in price. The company will buy some more Bitcoin. Um, and yeah, it's worth pointing out that MicroStrategy's been around about 20, 25 years now, and they are predominantly a business intelligence software company. Like they still offer that service and product, but they've also essentially turned into a Bitcoin holding company in parallel as well. More adoption news was a hedge fund, Brevan Howard Asset Management, has formed a new unit to manage cryptocurrency and digital assets. So again, just more validation for the whole space. This investment firm is based in London and is mainly focused around macro trading. And it also named the CEO and co-founder of CMT Digital as head of this crypto unit. And the company here saying that the move underscores the firm's commitment to rapidly expanding its platform and offerings in cryptocurrencies. Final adoption news of the week was Bain Capital Ventures, so the venture arm of Bain Capital, which is a huge private investment firm. I think it's based in Boston, I'm pretty sure. They disclosed they disclosed the creation of a new crypto-focused fund, and earlier this year, or a couple of months ago, they announced 1.3 billion US in fresh funds for startups to invest in startups. And I think it was speculated at the time that a portion of that would be for cryptocurrency. So it looks like they are, um, yeah, going down that route. So exciting times. More capital coming into the space is always great news when it comes to hiring really great talent and more developers into the space. So very promising news. What I think was the biggest news of the week actually happened a few hours ago with the in the US, the Securities and Exchange Commission, which is one of the handful of financial regulators in the US. Their chairman, Gary Gensler, released prepared remarks for or a testimony rather for ahead of his um, Senate Banking Committee hearing tomorrow in the US time. This was really big news because his language was, as I've covered in previous videos, he's really been stepping up, and his posturing towards the cryptocurrency asset class and market has really started to ramp up in the past few weeks. Um, in terms of him wanting more authority, the SEC wanting more authority to go after crypto exchanges and to, I guess, to just more robustly and more confidently regulate the space because at the moment the regulations are pretty vague. So yeah, this was really, really big news, and it'll be massive news tomorrow, whatever I'm sure it will be, whatever. There could be some fireworks depending on how much he kind of talks about cryptocurrency and what kind of language he chooses. But we saw last week I guess, the news that Coinbase received a Wells notice, so almost a threat by the SEC to sue them if they release this lending product. Um, and yeah, just more actions by the SEC to really just get some clarity about how much they can regulate the crypto space and even the teams that are responsible for building DeFi protocols, for example, like Uniswap Labs. Um, so why is this all important? Like, why do I think this is the biggest news of the week? It really, it's just not going away, this kind of uncertainty in the US about who's responsible, what government regulators and what agencies are responsible for regulating what parts of the cryptocurrency market and asset class is still, after all these years, it's still like no clearer than ever. And part of me thinks that this is almost deliberate by Gary Gensler in terms of he's just prodding regulators, like he himself is like a policymaker, but he's making all these statements and actions such as serving a Wells notice to really just prompt and elicit a response from regulators to get the ball moving in terms of clearing up the air about who can regulate what and how much control the SEC has. Um, that part of me thinks that's what he's doing, and um, I guess we'll learn more tomorrow. But yeah, I think it's just so important. It's just because the US obviously has so much power and influence, and a lot of other countries who are on the fence about crypto regulations, they will be looking heavily towards what happens with regulations in the US. So that's why I want to emphasize to you why I think this is so important in the short term for you personally. Like, it doesn't impact your usage of a protocol or a blockchain. Like, you can use Uniswap or you can use Ethereum or Bitcoin. Like, there's no like concerns there. I'm more talking about the longevity and I guess the growth rate of the industry. It'll be very, in my opinion, very affected by um, I guess the harshness or strictness of whatever regulations come out, and more importantly, the speed with which regulations come out, because the more we just dabble in this gray area where nothing really gets done, it's just a lot of language, the more that just frustrates and really just, kind of, I think innovation doesn't go as rapidly as what it otherwise would if there was just some certainty surrounding regulations. moving on to NFTs now. And after such an explosive growth last week, the last August in particular, finally NFTs came down, um, and the volumes and the price floors, so the average prices of NFTs, has really, yeah, really plummeted in the past week. It kind of happened in concert or alongside the crash in the crypto markets, but importantly, the cryptocurrencies like Bitcoin and Ether, and they all rebounded pretty off that flash crash, but NFTs kind of, it was a lot weaker of a rebound, and they kind of have since fallen more strongly than the average price of cryptocurrencies. So I want to share that with you because, like, I personally am looking at this as an opportunity to invest in NFTs that I'm I believe are really innovative and will be around in many years to come. So what I look for there is things such as community. In my opinion, is the biggest factor when you're talking about NFTs, because like they can only you can have thousands of NFTs out there, but if it's got no following and there's no community forming around an NFT and building different tools and pieces of art and having different hackathons and meetings and different guilds, and chapters based off around an NFT. If that's not happening, I'm not investing in that NFT. Like, it's just, in this day and age, you need attention and you need collaboration of a community to drive value towards an NFT. So that's why I'm so excited about projects like Loot and even Rarity that's built on the Phantom blockchain. These sorts of NFTs, as I've covered in recent videos, I'm just so excited about that concept of almost a community-led NFT, as opposed to something like Bored Ape Yacht Clubs and CryptoPunks, which is more like an artist releasing an NFT, and then the consumers or kind of investors like buying that and, in most cases just holding it and hoping that it kind of accrues value, um, in and of itself. I didn't do the best job of explaining that because Bored Ape Yacht Club is and CryptoPunks are examples where the community is actually formed around an NFT. So they're ones that I can picture in 5 to 10 years still being very, very relevant in the NFT market and having a huge value premium. But I suppose other NFT projects, they will just release an NFT and nothing will really happen after that. It's just like an artist making money, which is really good for the artist and definitely compared to what the non-NFT world is still such a huge benefit for them. But if that artist then just doesn't really do any more NFTs after that, it's just as a value proposition or investment perspective, I'm not really interested in just that top-down approach of just one single person releasing an NFT, and it's like a key man risk in business, really. Like that one single artist releasing an NFT, it's way too risky to rely on that one artist being around in 10 years and still giving as much focus and effort into the NFT. So I just want to comment on that there because that's the state of the NFT market that I'm really excited about this dip, and I'm still seeing just as much interest and, I guess, activity going on in the NFT space and by all the builders and, I guess, the hardcore kind of community members. I'm still seeing just as much fervor and excitement about NFTs as I ever have. Like, Loot has only been around 2, 3 weeks, and just today I saw a Loot hackathon was announced, like, which is unbelievable, coming just from driven by the community. They're like, we want to collaborate where we don't want to just message each other on forums and discords. We actually want to run a hackathon and get drive the best innovative ideas, have some judges from the industry. Like, it's just insane, and I'm so impressed by how rapidly these NFT projects, the ones I'm paying attention to at least, are evolving. So, as I've said in previous episodes, I don't see the NFT space like dying completely. I think NFTs are going to be here for like forever, really, for as long as blockchain technology, is around, and super excited for what's to come. We're still seeing NFTs hit headlines like such as recent days. Like it's definitely not like an NFT winter by any means. It's just been a massive dip after an explosive growth. So we're still seeing events like Bored Ape Yacht Clubs being sold by Sotheby's, which is a traditional auction house. They sold Bored Ape Yacht Club collection for $24 million US. So still seeing, extreme sales numbers. And it's definitely not, despair for the whole NFT market at the moment. I saw Cool Cats was another one. It was either Sotheby's or Christie's, another huge auction house. They announced that they're going to auction off Cool Cats in the middle of October. So still a huge amount of interest. And just on that, I wanted to share this event with you. I don't get anything in return for this. It's a free event anyway. But I wanted to highlight this because again, I don't think many people appreciate the use cases and applicability of NFTs and so an event such as NFT Fest Oz, which is run here. It's going to be run here in Australia, well, at least online anyway, and participated globally supported by Blockchain Australia, which is the crypto industry, the local crypto industry here in Australia. It's their biggest, I guess, representative body and industry body. So for anyone who is wanting to learn about NFTs and like how they're useful and what the value propositions are, I would highly encourage you to register for this free event. So I'll drop the link here in the description. For those listening on the podcast, it's nftfest.com.au. Um, yeah, I'm just still seeing so much confusion and talking with people who want some more clarification on how NFTs can be used. And this is something that I would highly encourage you, if you're interested, to sign up to this free event. So yeah, that's all. I think that's happening later in September, Thursday, 30th of September. Um, so yeah, if you're interested, you know where to go. Okay, just getting on the final stages here. Layer two, layer two solutions for blockchain. I'm just going to, as I've covered in recent weeks, it's heading into the rest of the year. They're basically every week, um, layer two solutions are going to be in the news and closely tracked. I've stated previously like why that's the case. It's mainly because right now, for Ethereum in particular, rather, I should have been clear, Ethereum layer two solutions. As I've said previously, Ethereum, the cost to use Ethereum has just gotten outrageously expensive, um, and unsustainably expensive in recent months. And whilst that's all well and good as it's a sign that people have demand for solutions on top of Ethereum, it has been a huge worry and concern of mine that if it continues for too long, that people are eventually just going to not use Ethereum and they'll go to other layer one blockchains. So the hope, as I've communicated, has always been, that these layer two solutions were coming online soon, and we've seen that recently in the past fortnight or so with Arbitrum, which is a layer two solution that uses optimistic rollups, which is just a way to I guess design their network and to make it cheaper to use. And that has just exploded in total value locked, which I'm not surprised by. It's proving to be a lot cheaper to use, than Ethereum, obviously. And yeah, it's up to about $2.2 billion worth of tokens have been deposited and locked up, in Arbitrum. Locked up is probably the wrong word. It's just sent to Arbitrum via like what's called like a blockchain bridge. Um, and yeah, I've just wanted to share that with you because of this. It's driving, well, it might be a complete coincidence, but I think it's at least partly responsible for this adoption in Arbitrum has contributed to Ethereum gas prices being really coming down, and they're the lowest I've seen them in quite a few weeks. And so 54 Gwei, it had been. had been at about 100 and even 200 for most of like the most days in the past few weeks. So to see it at 50 at the time of recording is very promising, and this is only the start. Like Arbitrum adoption, like the amount of solutions that are available on Arbitrum. So all of the most popular Ethereum based apps, there aren't really that many that are on Arbitrum yet. Um, there's heaps that are coming, but at the moment it's only like Uniswap, SushiSwap, and Dodo. They're about the three main ones, and Curve Finance as well. But yeah, seeing it'll be inevitable that like soon enough, MakerDAO will like release their DAI stablecoin on Arbitrum and Aave and Compound. And all of this is like not even I'm not even talking about there hasn't even been that many incentives as well even introduced. So when you see incentives introduced to use Arbitrum, that's when I would expect to see, um, yeah, just more usage go to Arbitrum um, and yeah, so very exciting there. I think there is the Arbitrum portal for those of you unaware that you can see all of the solutions that are coming to Arbitrum soon, such as Aave here. And RBScan, if anyone wants to go a bit deeper into Arbitrum and monitor the transactions and things like that, the uptake, RBScan is the place to go. It's built by Etherscan, and it's essentially Etherscan, but for Arbitrum, and you can see just the huge uptake in usage here. And I think Arbitrum is actually they basically had training wheels or guardrails on for this launch, for this first few weeks, and that limit has been hit. So once they take those off, that usage will even ramp up further. So that's one thing else to keep in note. But the total unique addresses, there's over 80,000 that have already like, migrated across to Arbitrum. Just on that, as I said, Optimism is another optimistic roll-up layer two solution that has that is launching like very, very soon. The Optimism team has said that they are announcing something this week. Um, I would expect this to be, they've had a whitelisting process on their, um, a whitelisting, I guess, process in place. So that means that the projects building on Optimism, the rollout has been a lot slower compared to something like Arbitrum, which hasn't had a whitelisting process. I would expect that would be the announcement from Optimism, and once that happens, I would expect, I'm really hoping that gas prices will even fall down even further. And if that happens, I'll be very, very optimistic for no pun intended. One other thing I really like, why am I even going on about all of this? Another huge reason for all of you ETH investors out there, um, and maybe those considering investing in ETH, I really want to emphasize how important this is for the value proposition of ETH, is because already, like only a fortnight into Arbitrum being live and a guarded launch, mind you, already Arbitrum is accounting for being the third highest spender of ETH. So Arbitrum and Optimism, their security is bounded. It's connected to Ethereum, which is a very, very important point for you to understand. Something like Polygon, their security, it's like a side chain. It's not really like it's very indirectly security is tied to Ethereum, but um, not really as the connection isn't as clear as something like Arbitrum and Optimism, where their sequences and their yeah, for their networks to work, they have to buy ETH to pay for gas. Like so, Arbitrum and Optimism still pay for gas. I really want you to understand that because it's why Optimism and Arbitrum are always going to be a bit more expensive to use than something like Polygon because you're also paying for that extra security of of Ethereum essentially. So that's why Arbitrum and Optimism will be paying gas. And why it's that important? It's because of this. It's come at a really nice time where EIP 1559 has gone live, which I'm trying to keep this as dumb like watered down as possible. But that EIP 1559 basically introduced fee burning to Ethereum, where some of the transaction fees like basically got deleted or burnt, and takes away from the overall supply of ETH, and really adds to that monetary scarcity of ETH. So basic economics again, if supply falls, and there's still demand for that same product or service, its price will increase. So for Arbitrum and Optimism to be coming out after EIP 1559, I'm just so excited to see how much demand there will be for all of this ETH. And I reckon that will be contributing to the burning of ETH like at a much higher rate than what we're currently seeing now, especially because Arbitrum is at a somewhat guarded launch. Optimism is at a much more severe guarded launch. They've been a lot more guarded in their launch. So once they go fully live, it's exciting times. And that's not even to mention the likes of ZK Sync that it's coming online soon. So I hope you're seeing how this really affects you if you are an ETH investor. It's really promising news, in my opinion. And if you're just a general Ethereum enthusiast and user, this should be good news as well because we're seeing the gas fees being driven down, or at least might not be a one-to-one correlation, but I'm sure that the uptake in Arbitrum is contributing to this lowered gas. Obviously, this decrease would be also partly attributable to the drop off in NFT volumes. But part of me thinks that Arbitrum is playing a part here as well. Okay, just looking at some price action for Bitcoin. I sound a bit like a broken record, but it really is just another story of this battle for the 200-day moving average. Um, where Bitcoin had been above it since about August 20, had finally broken above that 200-day moving average, which is a very psychologically significant trend line for investors and traders. Bitcoin finally broke above it and held above it until that big flash crash last week. And it had really threatened to drop below that 200-day moving average. It did over the weekend. It closed below it, closed below it, closed below it 4 days in a row. And today, actually, during this recording, Bitcoin's actually had a nice rally, a nice bump higher, and at the moment, intraday, it is above that 200-day moving average. So, if it was to close above it, that would be very encouraging. Um, and I think fundamentally, depending on SEC chair like Gary Gensler's comments and language tomorrow, that could influence markets. But to be honest, the Coinbase news last week with the SEC, we didn't really see that much of an impact on the markets. It came kind of after this huge flash crash caused by liquidations. And when the Coinbase news dropped, I thought, oh dear, like this is going to just drive prices even lower. The market's really vulnerable at the moment. That didn't actually happen. So tomorrow I'm also paying attention to how the news impacts the markets, and if it doesn't, and if the comments from Gensler are negative, that will be a bullish sign for me because it'll say that just the demand for Bitcoin is so hot right now, and there's so much capital on the sidelines, and all of these long-term holders, as we've been seeing on our collective shift member platform of Checkmate, on our on-chain analyst who contributes content for us, as he's been saying and demonstrating, all of these long-term holders of Bitcoin aren't really selling, at least as a group. They're all collectively still adding to their positions. So um, it doesn't really tie into the short-term price outlook, but I just wanted to share that with you because it is very important to see how the fundamental news impacts the markets. And if it doesn't impact it and that news is negative, it is also a very strong signal of where we are in the cycle of I guess the retail sentiment of the markets. RSI here is looking yeah a lot more healthy and basically is flat like neutral at the moment up towards 50, so there is room to go higher there as well. In terms of Ethereum or Ether, it's very much the same story. Above the 200-day and 100-day moving average quite comfortably at the moment. Broke above that 3,400 level that it had been kind of flirting with throughout most of August, and it was kind of a victim of that big flash crash, obviously, with Bitcoin as well. And at the time recording, is it might even have another go at breaking above that 3,400 level. Um, so yeah, we'll leave it there in terms of price commentary. What am I looking forward to over the next week? It's definitely this optimism news. Like, what is it going to be? It's probably going to be the removal of the whitelisting, which will, yeah, just mean more driving of adoption to optimism. I would expect Arbitrum to gain more usage because I haven't really seen that many incentive programs yet, and I know there's going to have to be a lot of aces up the sleeve of these DeFi protocols that are wanting their users to use their Arbitrum-based solutions. So the likes of Aave and Compound and even Curve, I reckon, will put some money and incentives behind using their layer two solutions. That's what I would expect. So if you are a user and you do get into things like yield farming, there's a big opportunity for you in the next few weeks. Um, and yeah, that's the main thing I'm looking at the next week or so. Um, so yeah, we'll leave it there. Do enjoy the rest of your week, and I will be back with another macro and crypto update next week. Thank you for tuning in.